investor just requires guidance to say this is the area that you should go, this is what the market is saying, but the ultimate decision in the management of that portfolio still relies with the investor. And most investors that go for non-discretionary portfolio are people who they still want the experience. They just want an expert to give them an advice. They have the time, they want to learn. So they value the collaboration, while the discretionary portfolio is for people who they don't have an extensive knowledge, and most often than not, they don't have the time to sit down to execute those strategies. So they would rather hand over the day-to-day management of that portfolio to a portfolio manager, who then does the investments, the active investments and the active management of that portfolio on a day-to-day. So those are the two distinct kinds of portfolio. And then one may ask, what exactly is a portfolio? Because you can make investments, and then you can make investments in a portfolio. So let's say you invest in a bond, or invest in shares, or you invest in money markets, mutual funds. Those are singular investment. They are just one asset class investment. Now, when you have a portfolio that sort of incorporates all of your investments across different asset classes, shares, that's equities, fixed income like bonds, money market like treasury bills, mutual funds, and real estate as well, whether it's direct investing in real estate or indirect investing through real estate funds. And all of that investment is put together in one singular portfolio, under one singular umbrella, pardon me. That is what you call a portfolio. So portfolios have, they are tailored to an investor's risk appetite, the time horizon. Some portfolios are short-term portfolio, some are medium-term, some are long-term. So they could range between 3 to 5 years, or longer term, which exceed 5 years. And they are tailored to meet each investor's needs. The portfolio of Mr. A will not be the same portfolio of Mr. B, because they would be in different phases of their life, pardon me. They would have different or varying expenditure. They could have varying income and all of that. So all of these things are factored into creating a portfolio. Now we will look at different life phases, and what are the salient things that are common to each of those life phases. And nowadays people finish school quite early. Some of them go on to get jobs almost immediately. So the phase between 21 to 25 years, and the things that are common to that category of people is, they are just getting income. Most often they are not. They have little to responsibilities for the majority of that group, and they are able to make higher savings at that point, because the income, they're just starting out, and the income may not necessarily be that large. So they look towards lower capital intensive investments, such as mutual funds, savings accounts. Some people just put their funds in a savings account. They don't even have investments. But these are the categories of investment that this group of people usually make. And then you have the group of 25 to 30 years, and they're starting to acquire assets. Some of them would have cars. Some of them, if they could have land, they could have, in some situations, houses, and their responsibilities are somewhat starting to rise. Some people are married within this category. So compared to the previous class, their ability to save is comparatively reduced, but they then go into advanced savings. And people of this group are typically not expected to just put their funds in savings accounts. They look to make investments that would yield some certain level of returns. But because their expenses are like I said, on the rise. They from time to time need funds, so they would be looking to make investments that are liquid and they can easily have access to should they have financial needs. For the group of 30 to 40 years, um, it is expected that planning for a longer term future is a necessity for this group of people. They then start to look towards life insurance schemes, mortgages for their houses, children education plan, and their needs in terms of investment also become a little bit more sophisticated. You have some of them that are looking to make investments in longer tenured um, investment opportunities that will then yield a steady stream of income. We have the group of 40 to 60 years. At this stage, you have people of this group actively considering retirement planning for the future. They're looking to enhance their income. Some of them form companies, they start businesses to get additional sustenance at the point of retirement. They start thinking of their dependents. They start to look towards trusts and wills. They start to consider tax advisory to reduce their tax burden. Some of them start to look towards offshore investments in other climes and currencies. And some people generally start to consider um, actively making investments that can cater to the current lifestyle post retirement. For people in the age grade of 60 years and above, for this phase, the goal that we preach is general peace of mind. It is expected that your affairs are properly planned at this age, and then you start to look towards generational transfer of your wealth. Consolidate. If you have investments in various other places over time, try to bring them together, consolidate, and look towards transferring to the next generation. That is the goal for people of this phase. So we then look at what essentially is a resilient portfolio, because we've talked about your phase of life. We've talked about what are the expectations for the different group. Then you talk about a resident portfolio. But before we go into that, we need to consider something very important. We've talked about personal situations, we've talked about income, but there's something very, very crucial in creating a portfolio, and that's your risk profile. And there are certain things that one must consider in making investments, or certain factors that influence the risk profile of an investor. They are the personal factors, your income, your phase of life, your expenditure, your personal taste. There are also external factors like those ones are not within your control. Those are market conditions, um, um, your jurisdiction, and all of that. Those things, they influence the risk profile of an investor. Now, there's a difference between ability to take risk and willingness to take risk. You may be willing to take a risk, but your what's it called now? Your risk appetite does not support. So, for example, I could be someone who, because shares pays dividend, I like to invest in the stock market, but my risk tolerance may be, or my capacity to take risk may not support that kind of investment that I like as a person. So, you could be willing to take a risk, but you don't have that risk tolerance by virtue of the other factors that influence your risk, such as your net worth, your debt load. So, for example, stocks are somewhat volatile. Someone who has a consistent expenditure from time to time may not be able to put the entirety of their funds in stocks, because at the point where they would need to pull out, for example, if I'm going to pay school fees in, say, another month, I may be willing to put funds in stocks, but that that personal factor does not support that my willingness to take risk. My capacity to take risk in line with that particular expenditure would be to just, it's not even balanced. It's a very conservative risk class, because if anything happens to those funds, it means that my children's school fees will not be paid. So I can only put that particular fund in an investment class that guarantees the principal of that investment. Now, they are based on risk tolerance. There are various classes, or various classes, let me use classes of investors. You have the conservative investors. These sorts of investors cannot withstand risk. Their threshold is very low. Their risk tolerance is low. And so the kind of investments that they should be considering would be your money market, treasury bills that are safe, FGN bonds, commercial papers, recommended commercial papers, and fixed deposits either in Naira or other currencies. Then for moderate investors, these classes of investors can take a balanced risk in their investments. They can look towards real estate investment funds. They can look towards corporate bonds. They can look towards exchange traded funds, and they can look towards actual commercial real estate. Real estate investment funds are investments that are backed by real estate. You are not necessarily making investment in a physical property. There's a fund that is created based off of the streams of income / capital appreciation of a particular property, but you are not actually owning an investment in brick and mortar. But for commercial real estate, you are buying a physical property, and the risk and benefits of that physical property also accrue to you as an investor. For aggressive investors, these are people that when you ask them, would you rather make an investment in an investment that guarantees you a 20% return and 8% risk, or an investment that guarantees you a 90% return and that guarantees you, say, a 40% return and 100% risk? They would rather go for that 40% return. They know that there's a probability that they would lose their funds, but because they are driven by an aggressive drive to make investments, the return is their drive. They are aggressive risk takers because the probability of getting a higher return is they would rather go with a probability of getting a higher return than a probability of getting a lower return with minimal risk, because they know that there's a possibility of them getting that particular return. So those are the people that invest in stocks and equity mutual funds and commodities and land in this. So let me differentiate between this commercial real estate and land. So for commercial real estate, you would consider things like the location, the streams of income, the ability to quickly sell that particular property should you need your funds. So a balanced investor would pick a property in a nice location that they know that if they need the funds, they can easily sell, and also they will be able to get steady streams of income from that particular property. An aggressive investor, however, would be the kind of investor that would go and invest in land in a location where you would not earn return in another 10 years, for example, because they know that 10 years will come and the returns will be much more higher than investing in an established location right now. So that sort of differentiates between both categories of investors for real estate. Then we'll be talking about a resilient portfolio. I'm trying to move to the next slide. A resilient portfolio is a portfolio that is well diversified, meaning there are a well-balanced mix of investments or asset classes that can withstand market shocks, economic downturns, and unexpected financial events while still achieving your long-term growth objectives. It's factors in your risk and return. It balances, so it's not overly bullish on return such that it neglects risk. It's not overly conservative on risk such that it neglects return. It sort of balances out the risk and return such that you are making attractive return while maintaining a certain level of risk that aligns with your risk profile. So the primary purpose of creating or building a resilient portfolio is to preserve your capital during periods of market stress. So one would think in situations where there is a global or general downturn in equities, for example, a well-balanced or a resilient portfolio would have invested in stocks that have very good fundamentals, such that when there are momentary or when there are seeming bearish situations in the market, the fact that there are solid fundamentals behind those stocks, the portfolio itself will still be able to bounce back or rebound and still achieve the financial goals of the investors. And also, there could be rebalancing in that portfolio such that capital can be reallocated to other asset classes that would still maintain your steady stream of income. And a resilient portfolio reduces emotional decision making. It focuses on fundamentals. It's not a function of, oh, this thing is going down, I think I should exit this position. The a, a a portfolio manager will consider what are the factors or what are the reasons for the market being the way the market is right now, what are the fundamentals behind each of those asset classes, and consider all of this vis-a-vis the investors' financial goals, and then adapt that portfolio to changing economic realities without excessive rebalancing. This helps investors to confidently make investment decisions that will still meet their financial goals, even when uncertainty is very high. So, looking at the core principles of investing, so we've talked about risk management. I've talked about risk management. You manage risk, you don't avoid it. A resilient portfolio would actively consider the risk inherent in the various investments that are to be made and manage those risks. Diversifying means spreading your investments across various sectors and asset classes to significantly reduce losses. When one aspect is not doing well, the other aspect will be doing well, and then that can balance out whatever negative negative returns that comes from the aspect that is not doing well. So if you are reactive in an unpredictable economic environment, you are likely to lose funds due to volatility rather than you are likely to lose more funds. So it pays to just maintain a balance. That's what I was talking about for discretionary and non-discretionary. For in portfolio management, a client may be looking at their portfolio and they become agitated and then they want to exit positions, but they haven't considered actively the reason those positions are the way they are. They haven't considered whether this cyclical or this downturn is a momentary one or it's a long term. Now, a portfolio manager, when the price of a stock is going down, based on the financial objective of that portfolio, may buy more of that particular stock as opposed to exiting that position. Now, at some point, investors, when they are making their own investment, I am sure that majority of us have sort of fallen victim of this. When the price of a stock is going up, for example, we may tend to buy more because we feel that the price will keep going up. But a portfolio manager will consider the reason why the price of that investment or of that stock is going up and what is the upside potential of that stock, and consider whether it has maxed out or there is still opportunity to make money in that particular stock. And that will inform the decision whether they would buy or not buy that particular stock. It's also the same for money market investments. So when rates are higher, some people may decide that rather than going long, I would go short because the rate may keep going higher. But an investment manager or a portfolio manager will consider what's the economic situation, what is the economic outlook for that asset class, for that investment class or that asset class. Are the rates going to, will they keep going up, or this is just a momentary thing? And they will decide to take a longer position as opposed to a shorter position, so that when there is sort of a reversal or when the rates start coming down, they are still locked into a longer tenor with a higher interest rate than someone who felt that the rates would keep going up and was waiting it, or was locked into a shorter position. When that shorter position then matures, the person would have to then reinvest into lower returns of investment. So that is what this long-term perspective versus short-term noise is talking about. Markets are volatile. They are driven by news cycles, political events, and investor sentiment. So the fact that the price of a stock has gone up constantly in the last 1 week does not mean that it will be the same next week. It could be a news reaction or investor sentiment in that stock. So, for example, when stocks pay dividends, investors may exit position. That may drive the price of that stock lower. An investor may then think that they should exit that position because the price is falling and the price may keep falling. But that's not necessarily the situation. It is just that investors were exiting positions because they have taken profit. And if that stock is a stock with very good fundamental, it will still achieve its upside potential. So we'll be looking at strategic investment strategies and strategic asset allocation. Strategic asset allocation is a long-term blueprint for your portfolio. When you have your financial goal and you create a portfolio for yourself, there are strategic allocations that you make. You decide what percentage, or the portfolio manager decide what percentage is going to equities or fixed income, and what percentage can you go up or go lower. So those are strategic allocation. You have to assign weights across the different asset classes, and also you have to consider the your expenditure. It's not just about investment. You can't lock up all your funds. You have to consider what phase of life you're in, what expenditures would you be having, and then you have to create a line that would give you that would be in liquid assets. They are called cash or near cash instruments, such that you would be able to access those funds or those investments should you have need for them. So this is a typical example of asset allocation. The entire pie is your portfolio, and then the blue part represents equities. You have USD assets for the red part. Then the neon part represents bonds. The purple part represents real estate, and the blue part represents alternative investments, which could be commodities or any other alternative investments on the exchange. So the benefits of having an asset allocation is to reduce overreaction to short-term volatility, and you align your investments with your personal financial goals. Like I mentioned, you need to have near cash instruments, investments that you can easily access should you have need for that. And then aligning your assets to your financial goals, you know that you are not going outside of what your need is, rather than making yourself have access to a larger percent of your portfolio. You can have those other ones in long-term investment. If you know that you don't need this particular funds, for example, for a long term, you could increase your allocation to bonds, for example. So this enhances your discipline. And then the steady streams of income in forms of coupons that comes from your bonds will then cater to your recurrent expenditure. So tactical allocation is a flexible area of your investment strategy. It involves you making short to medium term shifts in your portfolio to respond to market opportunities. I've talked about certain changes in the market that could be due to news or that could be due to reactions in the market. So without abandoning your long-term investment plan that you have made, you can still make money by making short-term decisions. And this is for example, the market could present itself the opportunity to make money. Like I was talking about people taking profits and then prices of a stock reducing or dropping in the market, because you're aware that the price of that particular stock will still go up. You can make a tactical allocation or tactical adjustment to buy more of that particular stock with a view to making profit on it. And then once you've done that, you realign your portfolio back to your original plan. So you don't abandon your original plan. It's just a short to medium term decision, and it requires discipline and should be guided by data, not emotion. I mentioned that or you're aware, or the portfolio manager is aware about the fundamentals of that particular stock. So there's it's an informed decision. It's backed by data. So it's not just something that it's not just a spur of the moment or just an emotional decision making. So for example, this shows your normal conditions. This is your regular portfolio tailored to your financial plan. And then you have this percentage of equities, assets. And then, for example, if there is how do I say now? There's a gain, say for example, naira to the dollar drops, then you can make additional investments and reallocate to, maybe take out of equities and reallocate to your real estate, or reallocate to your I don't know, the slide is not moving. I'm trying to show what the tactical shift. Yes. So you're taking out funds from your equities and increasing your dollar assets. So if there's an FX devaluation, you would see that there's a jump in the FX assets that has gone from your original 25% to 40%. So this also could be as a result of it may not necessarily also mean that you have infused more funds into the FX asset class. It could be as a result of the devaluation, and then the percentage of your holding then goes up in your FX assets if you were valuing it in naira, for example. So we've talked about tactical allocations. Then we can talk about defensive plays. Your defensive strategy is aimed at protecting your portfolio during periods of high volatility or economic stress. So in Nigeria, all these instruments like the federal government bonds, mutual funds, USD mutual funds, or real estate with a steady streams of rental yields can provide an edge against FS pressure and market downturns. So when you reallocate, or your say there is a downturn or economic volatility, and there is a downturn in one asset class, you can take a defensive stand on your portfolio. You can invest in federal government bonds that are longer tenured, especially in situations when you don't know. I'm sure everyone remembers when treasury bill rates were as low as 4-6%. People who typically would invest in treasury bills and didn't want that low returns were defending their portfolio by making more investments in federal government bonds that were equally safe. They offered you the same safety that the treasury bill would offer you, but with a higher return and a higher, because you weren't sure how long that would take. You could buy, say, a 3-year bond with 3 years to maturity, or 4 or 5-year bond that will offer you steady streams of income in terms of coupons, and would be consistent over that period of time, pending when there's an adjustment in the economy, and then you can allocate your those positions back to what they originally were. Or you, as the economy starts to rebound, the income that you're getting from such mutual funds or bonds or real estate, you can then start investing them into other asset classes to then rebalance your portfolio, as opposed to reinvesting them into the same asset class that was yielding the returns. So the key elements for defensive play is capital preservation. You don't want to lose your capital during high volatility periods. You would also maintain income generation, like I mentioned, moving from treasury bill to federal government bonds. You have additional income. You could also buy properties that would give you attractive rental income, and also for stability. I mentioned that you're not sure how long the rates will keep bottoming out for, but then the bonds that you have invested in for a longer tenure would offer you stability over that period. And then essentially the reason for investing in the dollar funds is to hedge against inflation. So when you move into dollar assets, the returns that you're getting are in dollar. This is particularly for investors that have dollar liabilities. They have expenses in FX, or they plan to have. So someone who plans to go do a master's abroad in 1 year or 2 years may hedge their portfolio by increasing their position in FX assets right now, so as to get returns, earn returns in FX, and that can cater to the expenditure that they would have in the near future. Also, because you are not sure what the rates would be at the time of your expenditure, it is better for you to start planning pre the crystallization of that expense by hedging your portfolio in FX. So this is a typical case study for resilience in applying resilience in a volatile year. So this person is a manager at an FMCG, 36-year-old, and earns an income of 3 million naira. The person's primary goal is to save for their children's education, preserve their wealth against inflation and FX risk, and then build a retirement cushion over the next 10 to 15 years. The person's risk appetite is moderate, which means they can withstand some level of risk while maintaining they can maintain some level of risk while earning considerable returns applicable to that risk. So their pain points is the fact that the portfolio is currently heavily exposed to the Nigerian equities, and they have low confidence in Naira denominated cash savings. This kind of person probably has a plan to in future send their children abroad, and they are looking to move their assets to FX denominated, which is why there's a pain point of dwindling value of the Naira against the dollar. And also they're heavily exposed to the equities, which means that this person would have to tactically exit some of their positions in equity. So when they are exiting that position in equity, they would be investing the proceeds from that in USD, because the financial goal is to preserve their wealth against inflation and FX risk. So the strategy the person implemented is to diversify the portfolio by exiting 50% of the local equities. That's they are taking 50% of their holdings in shares and putting it into USD funds. The person added a 10% of real estate investments and then shifted the cash holdings to FGN bonds and money market funds, because money market funds will offer you it's like eating your cake and having it. It will offer you attractive returns, comparatively attractive returns. And also, so it's seemingly like you're holding your cash. So rather than holding cash, you are putting it in money market funds where you are growing the funds, and also you have access to that fund in case of emergency. And putting funds into short-term FGN bonds, it's not only short-term because they would mature in the near future. You would also get coupons from that investment that you can use to defray your expenses over time. And the outcome in 12 months is that the portfolio value excuse me, the portfolio value was preserved despite Naira volatility, and they earned consistent USD income and less stress during the macroeconomic shock. So rather than the person checking every 2 minutes, as the price gone up, as the exchange rate gone up, as it gone down, they sort of maintained, peace, knowing that their portfolio is well diversified and hedged against FX volatility and macroeconomic shocks. So haven't learned all of this, or haven't known all of this, then what then should be your next move? I've talked about several aspects of or several investment vehicles, or several investment classes, asset classes that you can put into your portfolio. And it is very important for you to understand what your investment goal is, and also identify your risk profile. At Meristem, when we are building investment portfolios for a client, we don't just guess what their risk profile is. There's a well thought out process. We have something we call the risk questionnaire. There's a series of questions that apply to your personal life, your income expectation, or the income that you're earning, and the current income you're earning, and your future income expectation. There are questions that apply to your personal biases as well. So in truthfully answering all of those questions, you will be able to determine what your risk profile, and that risk profile or risk tolerance is broken. You will see citations under your ability and your willingness to take risk. So it will tell you whether even though you're willing to take risk. I so much love the summary of that risk questionnaire, because for some clients that fall under conservative, it will tell them that even though your answers show that you're willing to take risk, your situation or the phase of life that you're in now does not allow you to take those risks, hence you fall under the conservative risk profile. So it's very important to identify what your risk profile is and to clearly define what your investment goal or financial goals are. And then you seek professional advice. I mean, you could read things, you could watch webinars, you could Google investment opportunities or read a lot of things about investment options. But it is very important. You cannot take away the place of professional advice in planning your portfolio. Advisors, portfolio managers, investment managers, they have access to analysis and information that help them to make informed decisions or help them to advise their clients on the decisions to make on their portfolios. And also, investment time frame is very important. You have to consider time frame of any investment when you're choosing them for your portfolio. I've talked about how you should maintain certain level of funds for emergency or for unexpected expenditure. So it's very important when you're planning your portfolio to factor in what percentage of investment you want to allocate to long-term investments, what percentage you want to allocate to short-term investments. I would not expect someone who is nearing retirement to go create a portfolio that is long-term focused. That will sort of be disastrous when they don't then have that steady stream of income at come their retirement. Fees are a very important factor to consider when planning your portfolio. Every investment advisor or investment firm would charge you certain fees when creating your portfolio or when managing your portfolio. It's important to factor that in such that the portfolio can adequately cater to the fees and costs applicable to the various investment vehicles that have been chosen. Tax implications. Nigeria is now, or the federal government is now more, they are putting or laying more emphasis on tax revenue from tax. And there are investments that were not subject to tax previously that are now subject to tax. So when considering an investment option, you have to consider whether they're subject to withholding tax and value added tax. And all of this will sort of reduce your return. So, when you look at an investment brochure, you don't just take the returns on the face of it and expect that your portfolio would return that specific returns. You have to factor in fees, tax, and all of that, which would potentially reduce your return. So all of this have to be factored in when planning your portfolio. For diversification, it's very important to diversify your investment. This will help you to manage risk and optimize return. When one asset class is not doing well, there's another asset class that would complement it. So key points to consider when for consideration when planning your investment. Explore investment opportunities, but don't be cash strapped. This cannot be overemphasized. You can, because this will sort of drive you into debt. Even though you have investments, if you don't have liquid assets that can cater to your needs, then you go borrowing. Effectively, whatever interest rates that you have to be paying on those loans that you take may sort of wipe out whatever returns. But if your portfolio is properly planned such that there are steady streams of income and near cash instruments that can cater to expenses when they crystallize, you would be fine. You have to start early and stay focused. It's not too, there's no time that is too early. I talked about much earlier in the presentation the aspect of investments that I don't want to use the word low income earners. People who are not earning as I can make. Don't keep your money in savings investments. You can do savings investment plans that have returns, but don't just keep your money in the bank, except if it is funds that you need to use like immediately. It's not too early to start making investments for children. Little funds like their aunts giving them money, somebody giving them something, 5,000, 10,000. All of this can go into mutual funds. As those children grow, they would understand the importance of investment, and it will become a part of them. You have to create, you have to be consistent and be disciplined. There's an issue that generally affects every one of us in Nigeria, and that's black tax, because um, we are very giving people, we are very emotional people, we are very family oriented people. And then this person comes to you, you give them, that person comes to you, you give them. It's very good to give, but you must, just as you're planning your investment, you must also plan your giving. You can allocate a certain amount to, in quote, philanthropic activities, and then you know that whoever comes to you during that period, you give them what you have. If you are properly planned such that the funds that you have left have definitive expenditure that they are going to cater to, then you don't even have excess to give out, in quotes. So you have to be consistent and you have to be disciplined in terms of how you structure your finances. You have to create a realistic spending plan. Much earlier in my saving years, I had this there was this habit that I used to do, that when I get my pay, I would put a huge chunk of it in investment, because I want to save, I don't want to spend anyhow. Then I would put it in liquid investments, right? Then the cash that I would have would no longer be enough to sustain me during the month. And then I'll have to then dip into that investment and say, I need to pay for this. It's very important that I pay for this. I will take it. And before I know it, I'm left with little or no savings. So until I then decided to sit down and create a plan that this would go to my savings, this will go to expenditure, this will go to emergency fund, and it would only be emergency fund only. So I created a buffer of funds for myself such that it would be enough to cater to my um uh, recurrent expenditure. Then I know that this investment that I have, this percentage is for investment, and then I lock it in investment such that it's not even accessible to me. And I know that my emergency fund is my emergency fund. Then I started to create alternatives. If I needed to buy something that would cost me 100 naira, then I would consider, is there an alternative that would serve the same purpose that I can save funds on? Then I do that, and that would leave me with some excess funds on my expenditure that sometimes I would carry to the next month. And this also speaks to that point that says explore other alternatives when making purchases. Set up an emergency fund that caters to unplanned expenses and structure a proper investment. Watch your addictions. Addictions are not only narcotic substances or unhealthy habits. There are certain things that we do that somewhat become addiction. We can, without us even knowing it. Some people, they cannot survive a day without eating bread. For some people, it's Coke. That thing that you do, it may seem small. I mean, you can think that, oh, it's not 200 naira, I'm buying this bread. It's nothing. You can start by deciding that instead of eating bread um, 5 times a week, I would reduce it to 3 times or 2 times a week. And then that excess fund that I'm saving from not eating bread, I will set it aside and put it somewhere. Then try that for a month. Try that for 2 months, 3 months, and then look at that buffer of funds that you have created from reducing your addiction. And then you realize that the funds that we look away from that are seemingly little, they then the saying that little drops make an ocean, then starts to resonate with you, and then you see how much you're really losing from these seeming addictions. Review and rebalance your portfolio and stay on top. We've talked a lot about how you review your portfolio, how you make tactical allocations, how you rebalance in situations of economic downturns, and how you should not abandon your long-term financial plan, while also maintaining balance with your tactical allocations. And also seek advice from professionals. We cannot overemphasize this. There are lots of investment opportunities that people have burned their fingers in, that just one line advice from a professional could have saved them the heartache. Thank you.
Wow, a round of applause for Oluwakemi Omoniyi. That was such a great presentation. I believe each and every one of us on this call have gotten value. I'm sure you learned something that you did not know about before. And while I'm letting Kemi catch her breath, I can see lots of hands up. To save our time, because we really have to stick to time. 2 hours should be 2 hours. We would like for you to please type your questions. I know we have some questions already. Please put them in the chat box. We'll be collating them. We have seen the prior questions that have been shared. So I'll just let Kemi catch her breath a bit, maybe sip water if she has to, because she has really been talking for a while. So please, if you have your questions, keep them coming. I would be looking through. I will be looking through them already. And I'm sure we have questions. I mean, when it comes to money, there are always more than enough questions, because everybody wants to know how they can manage their money or multiply their money, at least not lose their money, if at all anything. And I'm so glad that your presentation touched on a couple of things. You started with investment management overview. But before we even go there, I would like us to celebrate Meristem for giving us the opportunity to have one of their executives, share with us. So please celebrate Meristem. And to also let you know, if you're a business person here, Meristem has 7 subsidiaries. They have the wealth management part that help you manage your money. And then they have the stockbroking aspect as well. If you're interested in stocks, opening an account, having your CSTS number, CHN number, they're here to help you. If you're also into your business wants to need financial advisory, you want to raise capital, Meristem Capital Limited is happy to do that for you as well. And then if you're thinking of having a family office, you want to have intergenerational or transgenerational wealth, then the family office is available to provide that service. And also you're looking to have your will, your trust, estate planning, whatever type of estate planning it is, Meristem Trustees is there for you. And also you have the registrars and probate services, as well as the finance limited. You're looking for consumer loans or business loans or corporate loans. Meristem got you covered. So you can see these extensive services. Meristem is not playing. They've been in the game for a very long time, and they're here to help you preserve your wealth. Yes, so going back to Oluwakemi's presentation, she started with the importance of investment management, talking about portfolio management, the discretionary and non-discretionary type, which helped to set the stage for the conversation. And then she moved on to the different ages, because we have people of varying seasons here. We have the young adults, we have those who are in their midlife already, and then you have those who are also bowing out. She mentioned the different investment opportunities that you can take note of while you are in your different age ranges and the different responsibilities that you have. She also spoke about the fact that every time you think about investments, you should be thinking about your risk profile. What kind of risk taker are you, or manager are you? Are you conservative? Are you moderate? Are you aggressive? And then they are matching investment vehicles for different levels of risk tolerance. And then she went on to speak about building a resilient portfolio, the need for diversification across sectors and asset classes, long-term perspective versus short-term market noise, and then active risk management strategies and other implementations such as strategic risk allocation, where she showed us a complete portfolio and how it was divided and highlighted with different color legends. She also talked about tactical adjustments. So every time there's something happening in the market, maybe an effect devaluation, which was a scenario that she used, you saw how there was a sort of rebalancing to make sure that your portfolio is preserved. Several other defensive plays, capital preservation, income generation, FX and inflation hedging. I mean, I'm not the teacher, although I can't be the teacher here. I'm just doing a recap for those who just joined us lately. So straight, we're going to the questions. Um, so some of the questions I took from the chat box, I will just read them here. Emmanuel says, can you enlighten me about mutual funds and ETFs? He would like to know if they are the same, and if not, what are the differences, and how can one start investing in this with Meristem? He also wants to know how he can identify his risk profile. He's also concerned about which is more profitable, ETFs or mutual funds. So I think we'll start with that, and then I'll go on to the other questions in the chat room. Thank you, Oluwakemi.
Okay. Mutual funds are a basket of funds managed by a fund manager, and they invest in an array of investments. Now, before a mutual fund is created, it goes through a process with the Securities and Exchange Commission, that's SEC, and their guidelines. The fund manager will state the asset classes or the investment vehicles that mutual fund will be invested in, and it will be approved. And the fund manager cannot go outside of that investment vehicle that they had pre-stated before and in the various allocations that had been stated in the investment prospectus. And so mutual funds can either be, it can be on anything really. It could be a money market mutual fund, which is the most common one that people know. This typically invests in treasury bills, commercial papers, fixed deposits, maybe federal government bonds as well. And they are generally safe investments such that, because the vision for SEC is to protect investors and prevent them from losing money. So money market mutual funds are generally safe. They are the safest, so to say. And there are also equity mutual funds that invest predominantly in shares. There are dollar mutual funds that invest in dollar denominated fixed income instruments. There are also infrastructure funds. There are quite a number of funds. Now, the difference between any of those funds and exchange traded funds is that the exchange traded funds are traded on the Nigerian Stock Exchange. You can buy them. I'm sure maybe a number of people may know that Meristem has an online trading platform, and you can buy stocks on the Nigerian exchange and funds listed on the Nigerian exchange. So an exchange traded fund, typically you would be able to buy, if you have Meritrade, for example, you can see ETFs that are there. Now, for the fund, the mutual funds, they are managed and resident with the fund manager. They're managed by the fund manager, and you can subscribe to them by reaching out to the fund manager on the platform of the fund manager. It will not be listed on the exchange. That's typically the difference. And the returns on the various funds is dependent on how well they are managed by the fund managers. So the different investment, the ways that economic downturns affect individual investment, it also affects mutual funds as well. It's just that mutual funds may sort of have a buffer. For example, for compared to an investor that invests in fixed deposit by themselves or treasury bills by themselves, they may be their own return, because it's a singular vehicle, may be lower, because they are, when that asset class is affected, it would affect an investor with a singular investment. But in the mutual funds, because there are other ones, so if treasury bill rates are going down, the federal government bonds that have been locked in for a period of time, the returns will still be the same. If fixed deposit rate is going down and treasury bill is still up, the mutual funds will sort of have a cushion with that and will balance. So if, for example, somebody investing in fixed deposit is getting, say, a 12%, you could be getting a 19% in mutual funds because of those other investment vehicles in that bucket. I hope I've been able to answer that person's question.
Thank you very much, Emmanuel. I hope that you have gotten comfort with the answer. And if not, a contact has been shared in the chat box. You can reach out for further consultation and advisory services. So Oluwatomi Timininu Fanira says, we have an analysis using a more relatable income range. Well, Tommy, that was just an
Mm.
example. And, when it comes to giving advisory, it has to be tailor-made or custom-made. So it means you need to have a one-on-one. And what is relatable for one person is different from the other. So I don't know if Kevin wants to take that, or because in the
Okay,
illustration it was
so
3 million monthly
so
income. So maybe
let me use
500K.
well, I was even going to use a base, say an entry level salary, say
Okay.
give or take about 150 or 200. Now you know what your transportation is in a month, you know what your feeding is, you know what your house rent is per annum. So maybe you want to create vehicles. So by the time you set aside your transportation for the month, you are not going to how do I say it now? You're not going to be using all of that at the same time. You're going to be taking your transport every month. You could choose to take your transportation allowance and put it in a flexible savings plan, for example, that you can withdraw from, say, at the beginning of a week to cater to your week. So whatever small balance that you have in the savings plan, it will still have however small returns. For example, the flexible savings plan with Meristem has, I think, a 13% per annum return on your funds. So you have that. You have your say your feeding allowance. You can also put it in a savings plan. You have your house rent that you contribute a certain amount to monthly. That you can look at mutual funds that gives you a yield of about 20% and contribute that particular amount to it monthly. So you are not just building your rent such that when it's time to pay that rent, you're not running helter skelter. You are still earning, however small, some return on that money. Effectively, by the time you need to pay your rent, you would realize that your own contribution towards that rent would not be up to. You would have contributed less because the returns would also add some value to that fund. I hope that I've been able to answer that person's question. For people on lower salary level, your best bet is mutual funds. Mutual funds, if you have some lump sum of money that you plan for the future that you may not touch, you can then consider treasury bill of 90 days, 180 days, that's 3 months, 6 months, 1 year, or recommended commercial papers that maybe funds you can look away from 8 months to 1 year and just lock them pending when you would need them. But your day-to-day running funds or funds that you would save towards some months expense crystallization, you can consider savings plan that have returns and mutual funds.
Thank you very much for that. And so the next question is from Olamide Taiwo, and I think that the last statement that you made addresses this, where Olamide is asking, can a student invest? So you mentioned that for
Yes,
those
it's
who
going
are any
to.
low, you can do mutual funds and have a high interest savings account. So I think that addresses that
Mutual, yes,
already.
mutual funds is as low as 10,000 naira, so a student can invest.
Okay. So Olamide, we have addressed that already. One is asking, Omo is asking, how and where can I save and invest for kids' school fees and my kids' future?
Okay. Meristem has something called the Kiddies Assured Trust, MCAT, the Meristem Kiddies Assured Trust, on a smaller scale for you know, people who don't have a lot of money, but they just want to set aside something consistently for their children's education. People who will be looking on a higher scale can do a full blown children education trust. But as low as I think 100,000 or 200,000 to start, you can save towards your kiddies, towards your children's education using a kiddies assured trust. So there are various opportunities. So you could by yourself decide to create a portfolio or an investment that says, so we have a wealth body, right? Meristem has a wealth body. On wealth body, you can customize, you can create children's education, you can name all types of investments that you want to make. You can create sub accounts and name them. So you can do that by yourself, or you can do that through a specific vehicle like the Children's Education Trust or the Kiddies Assured Trust.
Thank you very much for that. Also, I want to appreciate Philip, who is responding and addressing questions in the chat room. Thank you very much for, putting all of those links and contacts. So Isaac Viola is asking, for those who are diaspora clients, how can they engage your services? Is it possible to have an investment management? Do you have something for those in the diaspora?
Yes, we do. For those in diaspora who would either be looking to invest in either dollar or pounds, we have pounds denominated investments and we have dollar denominated investments. And we have with Meristem, whatever currency you're making your investments, that is the same currency you're getting your investment back. So you don't have to worry that you're investing dollars, because that's like a general worry for investors, that they would be investing in a particular currency and then you'll be paying them back in naira, and they may have to then convert at the exchange rate that is not favorable to them to repatriate their funds. So you would make your investments in dollars or pounds, and then your returns and refunds are also in dollars and pounds. We have the Meristem dollar investment portfolio that starts as low as $2,000. We have the real estate advantage portfolio that is in pounds that starts as low as £2,000 as well. We have the Meristem dollar fund that starts as low as $500 as well. So you can make all of this investment. We also trade foreign stocks. Our portfolio management team trades foreign stocks. So you can also make you can also make investments in foreign stocks with Meristem. And I had seen somebody's question. Let me use this opportunity to answer that, as to whether a relationship manager and a portfolio manager, or an account officer and a portfolio manager, are the same with Meristem. No. A relationship manager is someone who liaises with you on your investments, and also speaks with you, advises you on, gives you informed, gives you information to make an informed investment decision. And also, if you have inquiries, if you have complaints, you can discuss with your relationship manager. Now, we have seasoned portfolio managers in Meristem that their own work is to manage portfolios. Now, your relationship manager may sit with you to define your investment objectives, to define your risk profile, create an investment policy statement with you, and then your investment manager will pass all of that to the portfolio manager, who would act on all of those documents based on your goals and risk profile, and take actions on your portfolio. And then your relationship manager would work with them, and then your relationship manager will give you feedback and reports on your portfolio. So they are not the same. For portfolio managers, sole task is to execute, plan strategies and execute on your portfolio, while your relationship manager would do your day-to-day interaction and discuss with you on investment opportunities. Thank you.
Thank you very much for that. For those asking for USD investment, yes, Meristem does that as well. Please note that some of these questions are being addressed in the chat room. Please look at it. An email has also been dropped if you need to, seek further clarification from now. Also, two have been mentioned. So if you're interested in stocks, you need to download Meritrade. And if you're interested in other types of investment, you can download the Wealth Body. Am I correct? Okay.
Yes, you are correct. And also, for those in diaspora, our trustees also do Meristem Diaspora Trust. For people who are worried about making investments in real estate, doing investments in maybe they want to invest, maybe those are the larger investors who want to invest in companies and make various investments in Nigeria. Our trustees have the ability to cater to or to manage and oversee the affairs of your affairs in terms of your investment, and collate everything and work with other professionals to properly manage and ensure that you're well protected.
Wealth Buddy is the name of the second app. Wealth,
Yes,
wealth,
well
then
studied.
body like a friend for the last person who just asked. Then Mary Trade, Meristem, but Mary, Meritrad. The link has also been posted in the chat rooms. Yes, Wealth Buddy, yes, correct. That's it. Yes. Emmanuel is trying to clarify. Are you saying we can buy foreign stock on Mary Trade?
No, not
No, I'm
on
not sure that's what
Meritrade.
she said.
This Meristem you can buy, but this the it's quite capital intensive. So it's not an app. There are trade sheets that will be sent out. So it's something that because of regulations around in Nigeria not yet supporting the full-blown app and all of that. That is still being worked on and discussed. But what we're allowed to do currently is manage in portfolios. So a relationship manager, sorry, a wealth advisor would discuss with you, get the trade sheets and share them with you on the stocks and their prices, get your mandate. This will be executed, and your contract will be sent to you, or your portfolio statement will be sent to you after the trades have been completed.
Lots of people seem to be interested in FX investment. So Benga has a follow-up question. He's saying funding these accounts with a tall order due to related charges both from here and in Nigeria. So I want to believe Benga is in the diaspora and he's talking about funding his account. He says that are you able to streamline so that someone can convert naira to dollar at Meristem rate?
So we don't have Meristem rates. We're not a BDC, but we have partners that work with us. So when clients have Naira and they want to invest in dollars, they let us know, and we speak to our partners, we get the rates, and then we share with the client. If the client is fine with it, we settle the partner, and the partner settle us with dollar. This is seamless for the client because they don't have to worry and wonder whether the person will run away with their money or not, and they don't have to have the hassle of getting the best rates. And sometimes we have clients who have dollar investments that need Naira. From time to time, they may say that we should help them sell a portion of their dollar to Naira and pay them in Naira. So when we have clients who equally want to buy Naira, we just settle the Naira, settle the dollar in the client's portfolio. That one, no charges are involved whatsoever, because the funds, both for the Naira clients and dollar clients, are already resident with us. We don't charge for helping our clients source dollar or converting their dollars to Naira. We don't charge clients anything for that.
Fantastic. I feel like we could go on and on because the questions just keep coming. Thank you, Adefe Taiwo, also for listening in the chat room. So luckily for us, you would all get the replay, but you would not get the slide deck. That's intellectual property. And because you get the replay, you get to see it. So you're not missing out anything actually. So just look out for the replay. The link is going to be shared with us. I'm looking through to ensure that I'm not missing anybody's question. Okay, I see one from Akintola Faduju. Is there an opportunity to grow investments without fixing such in a particular investment? That question is not very clear. Are you talking about diversification, or not putting all your eggs in one basket? Please, if you could rephrase that, please. Let it just be clear. We'll be happy to take that again. But I don't know if Kemi understands it, but I don't understand it.
So if I understand, maybe the person doesn't want to, if the person wants to grow their funds and probably doesn't want to do treasury bill or do commercial paper, they don't want to do something specific. For clients who are in that category, that's what mutual funds are for. So mutual funds helps you to get the best of all types of investments in the basket without necessarily investing in all types of investments in that basket. So somebody who has a 10,000 naira can definitely not invest in fixed deposits, cannot invest in treasury bills, cannot invest in bonds, but the person can invest in mutual funds and get the returns on all those other funds, all those other investment vehicles, because they are components of the mutual funds. So that's why someone with a 10,000 naira can earn a return of 20,000, sorry, 20% in mutual funds. So yes, without necessarily doing all of those investments, you can put your funds, your money in mutual funds, whether dollar or naira, and still benefit the returns.
Thank you very much for that. I think this will be the last question we're going to take. Izia Bolariwa says, I already have a stockbroker I'm involved with. Can I still sign up with Meristem?
Yes, you can. You can have more than one stockbroker, and as you proceed with the if you get signed up with Meristem, you can come to Meristem, start another investment with Meristem. If you want to move your stocks, there's a process that allows you to move your existing stocks with another stockbroker to Meristem. Eventually, if you do decide to do that, and there's also something that the Meristem stockbroking team does. It's called global tracking. So the people who have bought shares over the years, they may not remember, or they don't know where it is, or sometimes they had even sold those shares, but maybe some bonuses were credited to them and they did not know that, or they were not aware of that. You can do a global search through Meristem to CSCS that will tell you all of the stocks that you have and where you have them. This is not free because you have to pay for the service with CSCS, but it's not something significant depending on what the volume of stocks that you have is. But you'll be able to see all of the stocks you own in your name. Even if you've bought stocks in your maiden name, you've used other name in the past, there's a mandate letter that shows a global search letter that you would state all the names you've used, all the addresses you've used, and that will be submitted to CSCS. And then there will be a result that will show all the stocks that you have and where you have them. And then you can then take the next step to transferring them to Meristem, and then you can commence your investment management process.
Thank you so much, Oluwakemi. That has been a phenomenal presentation. Please help me celebrate her with a digital clap.
Thank
Everyone,
you.
we have a comment here, a feedback. Edith, thank you for that feedback. I'm sure the team will respond to you. For everyone, please ensure you send your email, and in the subject, please put PAU so that we can be, sended to as fast as possible. And then they also have a context of where your question is coming from. Oku Didi Onya says, this is a brilliant presentation by Oluwakemi. We need more of this to help drive financial literacy in Nigeria. Access to the right information is key to creating and sustaining wealth. Many people are struggling and grappling because of financial illiteracy. Thank you to PAUAA for organizing this. I find it very useful and timely. I totally agree, given what happened last month, where, the internet was agog with how much has gone into a particular scheme. I think this is very timely, and it's important that everyone should ensure that they are intentional about becoming financially literate, because you work for your money, so you should be concerned about where your money goes to as well. So thank you to the Alumni Association for putting this together. If you know you want to see more of this, I want to see that in the chat box, because this is just one person. So if you know you want more of this, put it in the chat box. We want more. We want it to be monthly. We want it to be quarterly, so that we can put together insightful sessions like this. And again, this is just to let you know that this is the Pan Atlantic University Alumni Association. For those of you who are just joining us, you joined us halfway. If you have graduated from your school a long time ago, we want to welcome you to join us. You can join any of our professional programs. And I know that you want to know some of the professional programs that we have and how you can ensure that you're continually learning, because the world is changing every now and then. The future of work requires you to reskill, to upskill. You can't remain the same person, you know. The certification you needed to get a job is different from what will take you to become a chief executive. And we have positioned ourselves at the Pan Atlantic University to offer you value as you grow in your career. So I want to welcome a representative of the professional education department, to speak to us briefly about some of the courses that are available for you to take advantage of. Please welcome Grace Kenneth. Grace, are you here?
Thank you very much, Stella. Thank you so
Welcome.
very much for this opportunity. Yeah. And thank you again, Madam Oluwakemi. That was a very brilliant presentation. I had so many takeaways myself, and I'm already thinking of the next big thing in the investment space, especially with Meristem. Thank you. Okay, so I don't waste any more time. Please confirm that everybody can hear me, by the way.
Loud and clear, Grace.
Okay. Okay, so my name is Grace Kenneth, like Stella rightly said, and I represent the Professional Education Department of the School of Media and Communication, Pan Atlantic University. And we have varieties of program and platform and that we offer to professionals like you. And I would really encourage everyone to take opportunity of them. We have so many. We have from the advanced business communication to the executive program in advertising that comes with automatic ACON accreditation, to the advanced writing and reporting skills for reporters, journalists, and key writers of organizations, down to short courses and seminars like the corporate identity and brand management program that will be starting on Monday, and we are also the ones championing and delivering the very popular MTN Media Innovation Program, as some of us may already know. And we have a lot of other programs. I'm just going to emphasize majorly on the two programs that are starting on Monday, the Advanced Business Communication course and the Corporate Identity and Brand Management Program. And I would really encourage us, if we can, to join the class. I know it's a very short notice, but if you really can, it would be very good that you join. And for the certificate courses, if you're not an alumni of the school already, the our certificate courses enables you to become a member of the Alumni Association. Yes. So if you do any of our 4 months, 5 months programs, and you successfully complete the course, of course, you can become a member of the Alumni Association. I'm just going to share on my screen to the brochure for the Advanced Business Communication course, if you don't mind. Yes. So sorry, why that is coming up. Okay, so we have here the flyer. No, sorry, what is this? Sharing. Okay. And this is taking a lot of time. So I'm just going to talk about the program so I don't waste anybody's time. The Advanced Business Communication course enables you to, it is more than business communication. It is actually, it's more about insights into business. And I'll read some testimonial from participants, past participants. And one person said, the Advanced Business Communication course has been a game changer for me. I learned how to write comprehensive financial reports, drawing valuable insight from data to make informed decisions, and more importantly, that this program has equipped me with the techniques and tools to present data in a compelling way, allowing me to tell stories that drive results. Another person said, this course is not just for those in communications, it's not just for those in comms, because most of the people that come for this course is usually head of corporate comms of different organizations across different industries. And I go further to say that it's for everyone who wants to get to the top, because it's touched on every aspect of work. It is more than a business communication course. My presentation skills are improved and I highly recommend it. This is just very few of the different testimonials we've received over the years. And you have a lineup of professionals that will be taking this course, from Professor Amiso George to Professor Uche Oyebade of the United Kingdom to our very own former Vice Chancellor, Professor Juan Eleido, to Professor Emeka Osuji, Professor Tayo Otubanjo of LBS, Professor Rotimi Oladele, Professor Olusegun Vincent, Professor Dr. Silk Obu, Dr. Rotimi Olaniyo, and so many others. So many others. And this course will touch on topics like the business communication fundamentals, ethics in business communication, diplomacy in business communication, policy and crisis communication, communicating the numbers, handling the media, communicating in the digital age, brands communication, strategy and market analysis, as well as public speaking and presentation, among others again. So I highly recommend it to anybody that is looking to upskill themselves in the area of business communication, especially people that are the spokesperson of their organization. If you're going to be representing your organization in the media and be talking numbers, even if you're not a financial person, there is a session, a whole module on finance for the non-financial experts, and I highly recommend it. On the other hand is the Corporate Identity and Brands Management Program, and it is basically for brands managers, corporate visual identity personnel in organizations, and it's just a 4-day course starting also on Monday, and will be taught by several professionals also in the areas of brand management and corporate identity. I'll stop here now. I'll also drop our email address contacts in the chat box, so you can always reach out to us for further questions or check out our website for further inquiries. Thank you very much, Stella. Thank you everyone for listening.
Thank you, everyone. If you know you have gotten value for your time this afternoon, I want to see that in the chat box. You know that the past 1 hour, 50 minutes has been very valuable for you. It was a well invested time. You're glad that you are here. Please put that in the chat box just so that we know. Grace, you have a client, please reach out to the person. Maybe you want to take a screenshot of the person's name who is interested in brand management. The person just put that in the chat box. And please, if you're interested as well, please also put the contact they can reach the office on so that they can reach out after this. So it has been an amazing time. I have also gotten value. I have learned a lot. Thank you to the Meristem team, to PAU. And, as we wrap up, I just want to remind us, in case some of us might not remember, we've spoken today about the fact that you can start where you are. Even if you're a student, you can start with as low as 10,000 naira for your mutual funds, right? Every life stage has an appropriate investment strategy that has been mentioned. Don't worry, if you came in late, the replay will be sent to you. As long as you registered, it will be shared with you. Diversification is important. You need to also think global as well as you're earning local, even if you're earning local. And if you're also abroad, you can also invest in Nigerian market. And defense is very important. Defensive strategies in volatile economy is very important. And it's also key to have professional guidance. I see somebody who mentioned that they had invested in stock prior to now, they cannot find it. Oluwakemi mentioned that Meristem has a global search service, so they can help you recover any investments that you've had in shares or in the equities prior to now. So please reach out via the email that has been shared. I think we have gotten value so far. I want to welcome, just before that, this is to let you know that this is the investment interest group. We have several other interest group, and then we'll be having activities coming up from time to time. In the month of July, we'll be having an interest group session. The creatives will be having their segments. We'll let you know what that would be as well. And if you're in Abuja, the boardroom series is coming up the 13th of June. So if you know you're in Abuja, you know anyone who is in Abuja, the boardroom series is coming. The boardroom series is a platform where alumni have the opportunity to speak to CEOs of different organizations about how they navigate business, doing business in Nigeria. and how they have scaled in different sectors. So it's not limited to any sector. It could be finance, it could be media, it could be FMCG. So if you're in Abuja, make sure you keep an eye for the details. And also, if you're in the Alumni Association of the PAU, this is to let you know that elections are coming in September. And if you have any candidates you'd like to nominate, we have positions for the vice president and the secretary. So please do well to state your interest if you want to participate. It's also very important that we vote, because your vote is your right. So please ensure that you participate in the forthcoming elections to be held in September. If you are not following us on social media platform, you are wrong. So on Instagram at PAU_alumni, on LinkedIn and on YouTube, PAU Alumni Association, on X, PAU alumni, no space, no underscore, just PAU alumni. Let's make welcome our very own Vice President, Dr. Onyebuchi Odianjo, as she gives us the closing remark. Please, a round of applause for her as she comes off screen.
Thank
Is
you.
that how we
Thank you.
celebrate?
Thank
Thank you so much, everyone. Welcome, Doctor.
you so much, Stella. A very warm good afternoon, everyone. It's almost evening, it's 3:59. It's has sure been an impactful 2 hours. I'm here in the capacity of my president, who is unavoidably absent, but he sends his warm regards. My name is Onyebuchi Odianjo, and I am so glad I didn't miss this. I want to really appreciate the office for making sure that I didn't miss this. Ralph, thank you so much for ensuring that I'm here. To the 100 and over 120 person that didn't just join but stayed to the end. Now it's 127. That's to show how impactful this conversation was. It's one thing to sustain the attention of people for more than 1 minute, and it's another thing for everyone to have been on the call for the past 2 hours on a working day during the working hours. That's to show this has been such an impactful session. I truly want to appreciate our guests. Thank you so much, Madam Kemi, for pouring out this wealth of knowledge. Indeed, like Stella said, it's pertinent in this time. We all need to be prudent with our spend and know where to put our money. So thank you so much for taking out the time to put us through this financial training, because it's indeed a training. It's just that we didn't pay for it. It's really worth paying for. So thank you so much for giving it to us for absolutely free. These are the advantages we get for being part of this alumni community. And I'm also very happy that you're a woman. I'm very particular about women leading the space. So well done, Madam Kemi, and thank you so much. Thank you so much to Stella. A round of applause to Stella. Stella did a fantastic job anchoring this event. For her engagement, she ensured we're following through, ensuring that the chat is buzzing. So thank you so much, Stella, for a fantastic job. And talking about the chat box, please, we know that as soon as this call drops, the chat box, I think, won't be able to access it. So if there's any information you need to get out, like the link to join any of the courses in the SMC, please get the links, copy out. I see someone already being smart, sharing his LinkedIn page, advertising himself. This is our community. If you want to drop your LinkedIn page, I believe this will be a great time to do that so we can all connect externally. And then please get the links for registration if you need to join any of our courses at the SMC. I especially want to also thank the alumni office for always pushing through. Thank you so much, Madam Nkiru. Thank you, Ada. Thank you, Ralph. It's a three-man squad of an army. I don't know how to explain, but thank you so much for your drive, your push. Thank you so much for ensuring that the alumni community stays strong. We truly appreciate you from the executive committee. We'll appreciate if the slides are being sent. We see that the session is recorded, so we'd appreciate if we can get that. I think Stella had mentioned. So thank you so much. And this is to me saying, do have a blessed and lovely weekend from myself on behalf of the alumni committee. Thank you so much.
We would like to take a group picture. Thank you so much, Madam VP, for that. Thank you, Dr. Onyebuchi. Please, we would like to take a group photos. We would like to take group photos. Please, if you can turn on your camera, we'd just like to take a screenshot so that when we're making the post on social, we can also encourage others, to join subsequent sessions. We want to encourage everybody that has joined this that your financial future starts with the decisions that you make today. Don't procrastinate. Go to the chat room now, pick up those emails for the courses, to reach out to Meristem. Please take those emails and start today. Send that email, take that leap of faith. The month just ended. Don't spend all your money already. Put some of it in investment. Start small. 10,000 naira. Cost no money. Put it and you'll be glad that you did. So use what you have learned today to start. Just make sure that you start, and I'm sure that you'll be glad that you did when you look back from today. Please, I'm sorry, Madam VP just dropped something in the chat box. I'm not